Hi, and welcome to How to Avoid Audit Findings, a presentation by the Federal Fiscal Monitoring Division here at the Texas Education Agency. Our managing director is William Doyle. So the audit managers who lead our stellar team of auditors are myself, Lisa Lorenzi, Lisa Thompson, Michael Scott, and David McLaughlin, our Federal Fiscal Compliance Officer, also known as our Enforcement Officer. Today's agenda includes the annual risk assessment, results from previous reviews, FFM's review process and timeline, the importance of policies and procedures, how we conduct testing with regard to financial management, and payroll and non-payroll items. Now on to you, David, regarding our annual risk assessment.
Thank you, Lisa. And now we'll talk about annual risk assessment. TEA is required to evaluate the risks posed by applicants before federal awards are received. We perform this risk assessment annually, starting in January and finishing by June 1st each year for the next fiscal year. We perform this risk assessment on LEAs, service centers, and non-LEAs. Any entity that received a grant through TEA in the prior year is evaluated for risk. We consider several factors when we design the risk assessment plan. Among those factors are financial stability, the quality of the entity's financial management system, the history of performance, results of the entity's annual financial reports, and their ability to effectively implement and manage the grants. We use data from several sources to help us score an entity's risk. LEAs are required to submit their annual financial reports to TEA by late November for June 30 year-end LEAs, or late January for August 31st year-end LEAs. LEAs that have more than $750,000 in federal expenditures are required to perform a single audit and must upload that annual financial report to the Federal Audit Clearinghouse within 30 days after uploading their annual financial report to TEA. We use the results of single audits as risk factors. For example, if a finding is a repeat finding from a previous year. Entities with a large portion of their expenditures from federal funds are awarded risk assessment points. If another TEA department refers an entity to FFM during the risk assessment process, we award points for those referrals. And finally, the entity's history of managing grant funds is considered. Here are the results from last year's risk assessment process, fiscal year 2021. Only 6% of all entities scored as high risk, and the rest of the entities were split between medium and low risk. Only 65 LEAs, 3 ESCs, and 1 non-LEA scored high risk. So, what are the impacts of risk assessment scores for the entities? The TEA Grants Division uses the scores in their negotiations with entities each year. A higher risk level may mean more questions for the entity, for example. The FFM division also uses the risk scores to help select grantees for subrecipient monitoring for the upcoming year. Once FFM chooses an entity for subrecipient monitoring, the risk scores also determine how many transactions are reviewed by our auditors and which program requirements are reviewed. Now I'll turn it over to Lisa.
Thank you, David. Now to talk about results from previous reviews. Our team of auditors conducts approximately 100 desk and on-site reviews each year. That translates into about 350 to almost 400 total findings and observations, resulting in an average of $700,000 in preliminary question cost. But luckily, with collaboration and work with LEAs, we're able to resolve about 90% of those question costs. Let's discuss the average percentage of findings by category. In first place, we have allowability of cost, which includes both payroll and non-payroll related issues and accounts for about 42% of all findings. In second place, we have procurement at 23%, And we'll go ahead and cover this a little bit more in detail in the slide following, and also my colleague Mike Scott will cover it a lot more detail on how to avoid these procurement-related findings later in the presentation. In third place, we have financial management systems, accounting for about 15% of all findings, followed by budgetary controls at 8%, obligation of funds at 7%, compliance with grant-specific requirements at 3%, and cash management at about 2% of all findings. Now let's take a look at the percentage of procurement findings by category. Here's where we take a deeper dive into the micro purchase, small purchase, competitive, and non-competitive proposals. In first place, we have small purchase, accounting for about 56% of procurement-related findings. This is typically because an organization fails to provide additional price or rate quotations, which demonstrate that they actually shopped around for the best value, or that they misapplied the appropriate procurement method based on threshold amounts. This again is why it's so important to have written policies and procedures that are up to date and well communicated with your staff, because these policies and procedures also dictate the thresholds for micro purchase, small purchase, and other means of procuring contracts. Then let's move on to non-competitive proposals, also known as sole source, which account for about 22% of all procurement-related findings. Now, I'll just let you know that non-competitive proposals are very hard to meet. So if you think you have a non-competitive proposal, you may want to think again. There are these 4 criteria that are very hard to meet, one of which is that the item or the goods is available only from a single source. This is very hard to demonstrate in a global world and economy. The second criteria is that there's a public exigency or emergency that requires that there must not be a delay. And so that's usually in the case of like FEMA or COVID, and again, very rare instances. The third criteria is that the federal awarding agency or pass-through entity, TEA, would expressly authorize the non-competitive procurement. So again, you would have to have TEA's express written approval for this particular criteria to be met. And the fourth criteria is that after you've solicited a number of sources or vendors for competition, you've deemed that that competition was inadequate. And so again, when you think you have non-competitive proposals, you probably don't. Let's move on along to micro purchase and even competitive bidding. They both accounted for about 9% of all procurement-related findings. Let's talk a little bit about micro purchase. Typically, it's an issue where they've used the wrong threshold amount because, again, the importance of policies and procedures dictate what the thresholds are between a $3,000 threshold or even up to a $10,000 threshold for these things. So it's important that organizations use commodity codes to group and aggregate their like type items so they don't misapply the correct procurement method. I mentioned before with competitive bidding or competitive proposals, typically we see issues regarding where the competition wasn't adequately publicized and they didn't have a method demonstrating how they acquired and compared apples to apples when looking at vendors and the way in which they evaluated the best value for meeting their request for proposals. Now let's move to the FFM review process and timeline. Our monitoring objectives are to ensure that financial management systems have strong internal controls, that we ensure that selected expenditures are allowable, and that we address any questions, concerns, and observations during the review to ensure real-time adjustments that will comply with all federal grants. Our audit timeline begins usually in January and February with an engagement letter that includes the monitoring notification, a request for the Administrative Procedures Manual, general ledgers, payroll journals, if applicable, and any grant-specific information. From that, our auditors then put together and issue a second letter sometime in March and April where we request specific supporting documentation such as invoices, contracts, time and effort documentation, and procurement contracts to support items that we plan to test. Then, and usually about May or August, we issue a preliminary report. This is where we present our initial findings and observations. We allow the auditee to review and respond, and we collaboratively work together to resolve findings, which then leads to the September-October timeline where we issue our final report. This is where we conclude the audit process, and any unresolved findings are sent to enforcement to our enforcement officer, David McLaughlin, and any remaining question calls must be returned to TEA. Let's talk a little bit about the importance of policies and procedures. Policies and procedures must be locally developed and approved by the board, and they must align to the federal standards. There's an emphasis on should versus must throughout. Policies and procedures required by Edgar must be written. And again, with that emphasis for should versus must, there's a lot of policies and procedures related to payroll-related services that should be written because there are some must-have requirements. So let's talk about those a little bit more in detail. Here's the catalog of required written procedures. Basically, an organization must have written procedures regarding conflict of interest, cash management, procurement specification requirements, procurement evaluation procedures, allowable cost, and travel policies. Please note in red the updated requirement references. Do you notice anything missing? That's right, time and effort. Time and effort is a strong should best business practice. It's not necessarily a must, but we've found in our experience that when policies and procedures regarding time and effort are not written, then the organization usually has findings because the team doesn't understand what's expected. And so charges to federal awards for salaries and wages are then usually an issue. So think of your policies and procedures as a game plan or a roadmap. Use it as a way to let the team know what's expected. So again, the list of required written procedures that I showed you before didn't include time and effort, but we've seen so many findings related to time and effort, and that is because if it's not written or documented, it's hard for the entire organization to know what's expected and how to account for that information. So implementation pitfalls we've seen are when you have a policies and procedures, but it's not tailored to your specific organization. Or we've seen a lack of training for all personnel, where only a certain group, like the business office, knows the policies and procedures in and out, but maybe your accounting department or your program staff don't. So it's important to communicate your policies and procedures with everyone. If not everybody has access to the game plan, then we don't know how to play the game. And last, we've seen another implementation pitfall where it's a lack of updating, whether it's the threshold amounts for micro purchase and or small purchases. That can be a problem when people in the program office are trying to purchase something for, say, a Perkins grant, and they have the wrong threshold amount and it's outdated. So be sure to have it documented, even if it's a should. It's a very good business practice to have everything documented. Make sure you've tailored it to your organization, trained your personnel, and communicated that, and make sure it's updated. Now let's take a look at the financial management piece and how our auditors test this part. Our team of auditors review a variety of accounting software and reporting systems. And so we rely heavily upon the FASRAG, the Financial Accountability System Resource Guide. It basically describes the rules of financial accounting for school districts, charter schools, and education service centers. The FASRAG helps us to create general ledgers that have uniformity with regard to certain information, specifically about appropriations, encumbrances, description of transactions, expenditures, and balances, so that we can compare apples to apples and do financial management testing or cash management testing. Our team reviews the general ledger, and we try to reconcile it to the grant-approved budget, including down to the cost object codes. We also test cash management to verify that the ledger includes enough expenditures to cover any reimbursement-based requests through the ER system, because again, this is a reimbursement-based method, not a cash advance system. And finally, we will test any supporting entries in the payroll journal, if applicable, to make sure any subsequent journals match the general ledger. So here's an example of how we do our budget reconciliation. On the left, we have the TEA approved budget, and we reconcile it to the general ledger budget that the LEA has provided us. And looking at each object code based on the 6100, 6200, 6300, and 6400, we're able to identify if the grand totals match and if those budgets and expenditures match. We will also test the internal controls on cash management to make sure that the approved drawdowns through our expenditure reporting system have adequate expenditures in the general ledger that the organization is requesting reimbursement for. Again, this is a reimbursement-based method, not a cash advance method. You must have expenditures in your general ledger that equal or exceed what you're requesting to be reimbursed for. And then finally, if you have payroll-related expenditures, we look at your payroll journal. On the left, we look at the general ledger payroll expenditures, and we test and reconcile that to your payroll journal to make sure those two documents match. Now let's talk a little bit about payroll-related findings. One payroll-related finding is with regard to period of performance. It's important to note that when services are performed by an employee, the obligation is made. So if you have an employee performing services in the summertime, say prior to the start of a grant period, those summertime services or anything prior to the grant start date cannot be charged to the grant. Likewise, if you have a contractor and they have a binding written commitment that occurs prior to the grant start date, be sure to have a clause that explicitly states that the contract becomes effective within the date that the grant period starts and ends. Our team of auditors sample a variety of documents when testing payroll-related expenditures for the period of performance. We look at pay request forms, time cards, semi-annual certifications to ensure that the start and end dates are within the grant period and that the activities performed and provided are within the scope of the grant. Another payroll-related finding we see pertains to certification. All teachers and staff must be SBAC certified. Paraprofessionals must meet Title I Part A requirements. However, there are some exclusions. Charter schools. Unless charter schools have an IDEA B or Title III Part A ELA grant, or if their local policies and procedures require certification. Some districts of innovation may be exempt based on their plan. Substitute teachers are exempt. Highly qualified staff are exempt. Certain 21st Century Community Learning Center grant positions are exempt. And positions that don't have specific interaction with students are exempt. Now I'm going to turn it over to my colleague Lisa Thompson to talk about time and effort reporting.
Before we get into the detail of time and effort reporting and the documentation that we look at during our reviews, I just wanted to call your attention to the USDE cost allocation guide that came out in September of 2019. Now, it included a small but very important section on time and effort reporting requirements under 2 CFR 200, also known as Uniform Guidance. The guide clarifies that the intent of Uniform Guidance is to provide more flexible and less burdensome time and effort reporting systems. Now, while it gives non-federal entities flexibility in documenting the personnel expenses, it also establishes critical parameters within which that flexibility must be exercised. Specifically, that charges to federal awards for salaries and wages must be based on records that accurately reflect the work performed, and they must be supported by a system of internal controls and meet other general requirements in 2 CFR 200-430. One of the areas that the cost allocation guide also really stresses is the importance of written policies and procedures. Now, these are essential to implementing an effective time and effort reporting system. Within your policies and procedures, you should develop instructions for the completion of time and attendance reporting, the approval cycle that's required, processing of personnel charges to the federal awards, and the internal review process that you'll use to ensure you have effective internal controls over the federal award. Generally, the information should be in sufficient detail to permit an understanding of how the system will operate from the point in time that the employee performed the work to the point in time it's recorded in the accounting records and charged to the federal awards. Now, what are some examples of time and effort documentation that we might look at? We've got periodic certifications or semi-annual certifications, personnel activity reports, also known as PARs. We also have the TEA substitute system of time and effort reporting, which we'll get into a little bit later. And one other method that we see is a signed job description if it meets certain requirements under the EdFlex waiver, which again, I'll get into just here in a minute. The first type of time and effort documentation we're going to look at is a periodic certification. Now, if an employee works solely on a single federal award or cost objective, then charges for that employee's salary and wages should be supported by a periodic certification. The key to determining whether an employee is working on a single cost objective is whether that employee's salary and wages could be supported in full from the federal award alone if the portion of the employee's salary is also paid with non-federal funds or another federal award. So we want periodic certifications to cover a period of the year to support the wages paid to the employee. So for example, usually we see a semi-annual certification, one for the fall and then one for the spring semester. So we want it to correspond with a certain time period that's covered. What other information do we want this semi-annual certification to include? We want obviously the employee's name and position. Like I said, the reporting period that it covers, and then which federal programs the employee worked on, and a statement that the employee works solely on the federal program or the cost objective, and then the signature with a date of the employee and or supervisor that's done after the work is performed. Now, why do I say signature and date of employee and or supervisor? Because that's up to you. At the local level, what is your policy and procedure state? Do you require just the employee to sign and certify their time? Do you also want the supervisor to sign and certify their time, which is, a good control to have? Or are you okay with just the supervisor signing? Basically, it's up to your discretion. That's part of the flexibility that's offered under uniform guidance. You just need to make sure it's really important to have it clearly outlined in your policies and procedures, and then make sure that you're complying with those policies and procedures. So for example, here we have Mr. Duck, who is a homeless liaison. Now he's paid partially from TEHCY, Texas Education for Homeless Children and Youth, and then also partially from Title I. In this case, he is a single cost objective because his position could be fully funded from either one of those programs. We also have we have his signature and the date, and then in this case, Mrs. Mouse, and she's also dated the form. We have the coverage of the time period clearly delineated, August 2019 through December 2019. And as you can see, the form was signed February 1st, so that's what we're looking for, that it's after the period that the certification is covering. Here's another example of a periodic certification. In this case, we have Mr. Clark Kent, who is a reading interventionist. And in this case, he's 100% funded from Title I, which is Fund Code 211. And we do have the time period, September 2020 through December 2020, clearly identified, and his statement that he worked 100% on activities supporting Title I Part A for that time period listed directly above. We also have his signature, his boss, Mr. White, and both of the signatures are dated, so this would meet all our requirements. Now, I do want to point out at the very top where it says semi-annual certification 2020 through 2021, that alone we would not consider as being sufficient for identifying the time period. We want the specific months that are covered, which is why this one is acceptable, because under time period we have September 2020 through December 2020. If we see something, a form that just says the year, the school year, that's not gonna pass our testing. We really need to see the clear period that's covered by the certification. Employees who work on multiple activities or cost objectives should maintain time and effort that supports the distribution of their salaries and wages. This is typically done through a personnel activity report, or a PAR. Neither USDE nor TEA mandates the use of a specific form. However, there are some elements that must be present in the form. The employee's name, the employee's position, the reporting period, which is usually monthly, identification of each program that was worked on and the time that was worked on those programs, and then the actual activities performed for each program. So in this example, we have Bruce Wayne, works at Gotham ISD, and we can see clearly his position, Accelerated Learning Program Facilitator. We can see that this PAR is covering the month of October 2019. And then we can see the funding sources he's paid from. We have Title III Part A, and then local funds, or Fund 199. Then underneath that, he's got his time broken down by day, the number of hours spent towards each of those separate programs. This slide is for the same PAR that we were looking at on the previous slide, just that this PAR was too long to really fit onto one slide. So just imagine prior slide, scrolling down on the PAR, you get to this bottom part. I wanted to show you this because ultimately what the PAR is doing is adding up that employee's time worked on each of these programs and then calculating the percentage of their time. So what we'll be checking is, was the grant that we're reviewing, was the percentage consistent with the time that the employee actually worked? So in this case, the person was set up to be paid 80% and 20%, and then we can see here that it's within a reasonable variance. So it's pretty close. So this would pass. Now, also you can see that in this case, the employee did not sign the form, but the supervisor did. And this all goes back to the importance of your policies and procedures. So we're going to review your policies and procedures and see what your actual procedure is. In this case, if Gotham ISD only requires one or the other of employee or supervisor to sign, then this would be acceptable. Another way to report time and effort is through the use of the TEA substitute system of time and effort reporting. In order to use the system, you must have applied and been approved by TEA. This used to be done through submitting a PDF copy of the management certification, but we've now transitioned to using a Qualtrics survey to request and receive approval. Historically, the deadlines have been September 15th to apply to use the system for the fall, spring, and summer semesters, December 15th for the spring and summer semesters, and May 15th for the summer semester. However, with the pandemic, these deadlines are not hard deadlines. Just be on the lookout for correspondence from Grants Administration that will notify you of how to complete the survey and when the survey to request approval to use the system is due. Employees that are eligible to use this system are those that are paid from multiple awards and supported by multiple cost objectives and that have a fixed schedule. So in this case, the employee has to go into the substitute system, enter their schedule, and then the system calculates the percentage of their time spent on the various funding sources that they're paid from. For the TEA substitute system, it does require, it has to be signed at least semi-annually, it has to be signed after the work is performed, and it has to be signed by both the employee and the supervisor. In some instances, employees have even more flexibility regarding reporting their time and effort. Under the Education Flexibility Partnership Act, TEA has the authority to waive provisions of certain federal programs. One of the administrative waivers under EdFlex eliminates the requirement that charges for salaries and wages be supported by periodic certification if an employee works solely on a covered program or single cost objective. In this case, the employee's job description must clearly state that the employee is assigned 100% to the program or single cost objective, and it has to be one of the programs covered here: Title I Part A, Title I Part C, Title I Part D, Title II Part A, Title IV Part A, or Perkins. If an LEA is using this EdFlex waiver instead of traditional time and effort documentation, we will review the job description, ensure it's accurate, up to date, ensure it's signed, and that it clearly states the employee is assigned 100% to the covered grant program or single cost objective. The most common findings we see during our reviews regarding time and effort documentation is pure lack of written policies and procedures for time and effort documentation. Time and effort documentation is either non-existent or it's inadequate. It's not signed, or it's signed before the work is performed. Remember, we want it to be after the work is performed so we can ensure that it accurately supports what was charged to the grant. Sometimes we will see that time and effort does not account for 100% of the employee's activities. Sometimes the time and effort documentation does not support the costs that were allocated to the federal award in the same percentages or within an allowable variance of percentages. And then also a lot of times we will see that an LEA was not approved to use the TEA substitute system, but they did use that system, which is not allowed. One final issue that I wanted to bring up is time and effort documentation that includes references to old rules and regulations. So here, the time and effort referred to OMB 887, which we all know is now 2 CFR 200. So if you're going to have, a set time and effort certification form, please make sure that it reflects the current rules and regulations. Thank you.
Now let's talk about some non-payroll related findings. Again, with a period of performance, it's important to understand that for costs to be allowable, they must be obligated and expended inside the grant period. Contracted services should align with or fall within the notification of grant award period, and subscriptions that span grant years should be prorated. So when we're talking about the period of performance or the obligation of grant funds, an auditor will look at the general ledger and specifically identify when certain expenditures were posted. In this particular example here on your screen, we note that we see a posting of June 18th of 2019 for an item. Please note that this particular grant start date was actually August of 2019. So in this case, the items highlighted in yellow that were posted in June come prior to the start of the grant period, and so therefore the organization had obligated grant funds outside the grant period, and these would be questionable or question cost. Our team of auditors looks at a variety of supporting documents with regard to non-payroll. We look at invoice dates, we look at the dates in the descriptions of the invoices to ensure that they fall within the grant period under review.
As part of our testing for non-payroll expenditures, we'll be requesting supporting documentation to ensure that those expenditures are allowable. Some internal accounting documentation examples are purchase orders, purchase requisitions, and contracts. Some of the external or third-party documentation we'll be looking at would be invoices, receipts, and billing statements. So what we're looking for here is whether the purchase order or purchase requisition was approved before the purchase was made, so before the invoice date. So that way you can show that the purchase was properly authorized. Additionally, anything purchased with a P card, credit card, or online, you need to make sure it's supported by an itemized or detailed invoice or receipt. And regarding contracted services should have an executed contract that's signed and dated by both parties and goes into the details of the terms and conditions and what services are going to be provided under that contract. When testing travel costs paid for with grant funds, we're going to be looking to see if the costs are the actual costs, not the per diem rates, and that those costs do not exceed the allowable daily rate for lodging, meals, etc. We're going to look to see if the travel was approved both before and after it occurred. So an employee fills out a travel request form to attend a conference that's approved by their supervisor, and then the business manager or superintendent, whoever your local policies and procedures require to approve such types of expenditures. And then once the travel occurs and the person comes back, then they would, submit a travel voucher that has the actual cost that they spent, attached any receipts or billing statements, and then that would be approved by the appropriate parties as well. We're also going to verify that the costs are reasonable and necessary, and that we can directly see that they're directly related to the grant program that we're looking at. If it's any kind of a training or a conference, you want to make sure you hold on to any kind of documentation that you get at that conference, certificate of completion, other ways of proving that you attended, and we may want to even see the actual conference agenda to review the types of items that are being discussed to make sure that we can safely say, yes, this is allowable to be paid with grant funds.
Thank you, Lisa. Now we'll talk a little bit about procurement issues. Procurement in general is another area of administering federal grants in which we continue to see non-compliance issues in multiple areas, such as the various procurement methods, policies and procedures, commodity codes, and suspension and debarment. And as we saw earlier with Lisa's slide showing the breakdown of average percentage of findings by category, procurement issues have the second largest number of reported occurrences and issues and account for approximately 23% of all findings. Within the array of procurement issues, 3 specific areas, those being commodity codes, small purchase procedures, and the checking and documenting of suspension and debarment, these 3 have had the most frequently reported findings and observations. Procurement regulations have changed for this past most recent school year, that being the 2020 through 2021. And new, somewhat more lenient EDGAR regs were announced in November of 2020. For the most recent school year, that being 2020 through 2021, we were advised to follow the existing EDGAR regulations in place at the start of the school year. However, in the coming audit season, fiscal year 2022, we will closely review your policies and procedures to see that they align with the most current EDGAR procurement regulations, meaning the recently announced changes that affect federal grants awarded at July 1, 2021. As Lisa described earlier, your policies and procedures must align to the federal standards, that's 2 CFR 200, and they must be documented in writing. Remember, the overarching guidance for your procurement P&Ps to align with EDGAR's intent is that you will ensure in writing full and open competition. Commodity codes. Commodity code deficiencies account for a large percentage of reported procurement issues. Lack of a methodology for tracking commodity codes leaves one open to the risk of not complying with the various procurement thresholds if costs are not organized or grouped according to their like types. It is essential that like type items are aggregated and a total cost of the group commodity is monitored. This enables the necessary controls to stay within the various procurement thresholds. Interestingly enough, in the past, we have seen cases of an LEA following the micro-purchase procedures, but after our staff did their transaction testing, the auditors were able to demonstrate to those LEAs that those transactions were in fact small purchases as a result of exceeding the micro-purchase threshold. The most common issue was lack of a methodology demonstrated in the financial records for using commodity codes. Micro-purchases. Changes to federal grant regulations will require LEAs to make changes and updates to their policies and procedures for procurement before the coming school year and audit season. Changes to micro-purchase procedures and thresholds are included in the new regulation changes which became effective after November 12, 2020, but as stated before, will be implemented for ESSER 2, ESSER 3, and federal awards at July 1, 2021 and afterwards. For ESSER 2, ESSER 3, and grants awarded July 1, 2021 and later, LEAs may elect to increase their micro-purchase threshold up to $50,000. The most current EDGAR guidance allows for LEAs to self-certify for this higher micro-purchase threshold up to $50,000 if certain conditions are met. The self-certification must be done annually and must be well documented. This documentation will include a justification for the increased threshold, a clearly stated threshold amount, and supporting documentation of one of the following. Number one, qualification as a low-risk auditee based on the most current single audit. Or number two, an annual internal risk assessment designed to identify, mitigate, and manage financial risks. Or number three, a higher threshold consistent with state law. As of today, we have a record of over 200 LEAs that have self-certified to a higher micro-purchase threshold of greater than $10,000, but less than $50,000. The original deadline for self-certification was July 1, 2021, but this has been revised and opened for past July 1, 2021. So that deadline has been extended past July 1. We have made recommendations in some of this year's current audit reports to LEAs for them to self-certify for a higher micro-purchase threshold. For now, we'll discuss some of the other issues that relate to the recent years and the current audit season, the school year 2020 through 2021. And that's the one we're closing out in the next few months. Keep in mind that as we tested your micro-purchases and compared your policies and procedures for micro-purchase guidance, whatever threshold you document, even if it is a more restrictive amount, that which is documented in your policies and procedures, is the amount that audit staff will hold you accountable for following. So for example, if your policies and procedures had a micro-purchase threshold of $10,000, then that is the threshold we applied for examination and testing. However, if your policies and procedures had an amount less than the current statutory threshold, let's say it was less than $10,000 for micro purchases, then that amount is the threshold we used for testing the administration of the grant. It's always important to remember that audit staff will evaluate your adherence to your own policies and procedures. We want to emphasize how important it is to review the revised November 2020 regulations and ensure that your own internal policies and procedures are updated to align appropriately with the most current EDGAR. As always, be sure to review and communicate any changes to your updated policies and procedures with your staff. Small purchases. The simplified acquisition threshold is $250,000 for purchases. However, for ISDs and ESCs, the state threshold is lower, that being $50,000 or less in the aggregate per TEC 44.031. Nonprofits and charter schools are allowed to use the $250,000 simplified acquisition threshold. However, repeat, both ISDs and ESCs must use the $50,000 simplified acquisition threshold. As Lisa showed us earlier, small purchase deficiencies were over half the total number of reported issues last year. The most common issue was an inadequate number of quotes from qualified vendors. The minimum number of quotes is 2 from qualified vendors. Several typical occurrences last year involved LEAs compiling a list of vendors from which a qualified vendor was later selected. It was after this selection that then the LEAs negotiated the rate and terms of service with just the one vendor. This did not meet the requirement for quotes from 2 or more qualified vendors and resulted in reported findings for those LEAs. Competitive bids. Last year, audit staff reported findings for deficiencies with competitive bids. These issues resulted from the LEAs using competitive bid procedures for unspecified items or quantities, non-specific or indirect services, or using an approved vendor list to make competitive purchases, or using large amounts of earmarked funds that were predisposed to the purchase prior to a competitive selection. And also, another issue related to competitive bid was an improper evaluation process for awarding the bid. Non-competitive purchases. An example of this kind of finding with several LEAs this past year was a case of the LEAs using non-competitive purchase procedures and considering multiple vendors, one of which provided a sole source affidavit and then was ultimately selected. Per TEA's EDGAR FAQ, an affidavit or sole source letter is not sufficient documentation stating that the item or service is only available from a single source. I repeat, sole source letters or an affidavit from the vendor is not sufficient documentation for establishing sole source purchase, non-competitive purchase. Documenting the non-competitive purchase using a sole source letter or the vendor's affidavit will likely result in a finding. All ESCs are approved to provide sole source for goods and direct services. Only direct services. Indirect services are not allowed by ESCs to be used for sole source. So for all others, LEAs and others, non-competitive procurements may only be used when one or more very specific circumstances apply, and those are, number one, the item is available only from a single source. Note, this circumstance is hard to document and prove when questioned by auditors. Number two, a public exigency or emergency for the requirement of the goods or service will not permit a delay resulting from competitive solicitation. Number three, the federal awarding agency, USDE, or pass-through entity, TEA, expressly authorizes the use of non-competitive proposal in response to a written request from the non-federal entity, from the LEA or subgrantee. And number four, after solicitation of a number of sources, competition is deemed inadequate. So again, one of those four very specific circumstances must be applied, and they will be rigorously scrutinized by audit staff. Checking and documenting suspension and debarment. A high number of issues result from the ESC or the LEA responding to our request for information or the improper verification and documenting that a vendor is not suspended or debarred. Repeat, our request for suspension and debarment is that the ESC or LEA confirm to us that they have verified that the vendor is not suspended or debarred. We're asking a yes or no question about did you verify or not whether the vendor is not suspended or debarred. For example, from the FFM letter titled Request for Supporting Documentation, there is a table, and in the table, the item number 8 in the table reads, for each purchase listed in attachment B, please complete the following. Attest your organization verified the vendor was not suspended. Attest and provide supporting documentation your organization verified the vendor was not suspended or debarred for purchases with an aggregate cost of $25,000 or above. So the difference between 8A and 8B here is the $25,000 purchase amount. So in the table in the FFM letter looks like this. It's attachment B. It's called Detailed Procurement Information. It has the transaction number. It has the vendor or payee name in the column second from the left. It has a procurement method. It asks whether or not the item was purchased through a co-op. And then the column that I want to draw your attention to with the red arrow says, verified vendor was not suspended or debarred. This is just, we're asking for a yes or no response, whether or not you verified that the vendor was not suspended or debarred. This concludes our presentation on procurement, the audit findings and observations related to procurement, and it also concludes our discussion of audit findings and issues that we've uncovered in the past. That ends the presentation. Thank you very much.